Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. No shortage of news. Late-night star Jimmy Kimmel taken off the air by Disney following his comments to the reaction to the death of Charlie Kirk. Media reporter Matt Bellany.
ABC was hearing from both affiliates and explicitly from the FCC chair, who was threatening, saying this is going to be the hard way or the easy way.
Nvidia is investing in erstwhile competitor Intel, and tech CEOs join President Trump on a state visit in the UK, unpacking that cocktail of tech, geopolitics, and economics with Walter Isaacson.
It certainly makes me uncomfortable that there's a lot of what you could call state capitalism here.
The Federal Reserve's long-awaited rate cut is here. How American wallets are faring with Senator Elizabeth Warren.
I'm just concerned right now about the economy overall, and I recognize that rate cuts by themselves are not going to fix the problems that Donald Trump is causing.
And investor David Tepper. Markets watch his moves. Tepper on the Fed's role on sentiment.
You got to be careful not to make things too hot to have the other side of the mountain, which was really freaking ugly, in 2000 and 2001.
And what he's learned from the front lines.
A long time ago when I was a young man, when I was 30, I thought I could control individual markets. I can't control anything, and neither can the Fed. You can push it so far, but you can't push it beyond that.
It's Thursday, September 18th, 2025. You've got Joe Kernen and Mike Santoli today. This super-sized Squawk Pod begins right now.
Stand Joe by in 3, 2, 1. Cue Joe.
Good morning, and welcome to Squawk Box here on CNBC Live from the NASDAQ market site in Times Square. I'm Joe Kernen. Steck's here. Like Steckerman. Becky, I think, was scheduled in a little bit under the weather. Andrew was scheduled off. He'll be back tomorrow, so you're stuck. It's just me. Now, Mike Santoli, is that correct, or is it Rick Santelli? Have they got that? It's Mike Santoli. He's going to join us in just a little bit. We rousted his sorry rear end out of a deep sleep, and he's on his way. So, and the Federal Reserve cutting interest rates by a quarter percentage point. It was interesting, called risk management by Jay Powell. It was the first cut since late last year. The vote was 11-1. One new Fed governor, Stephen Myron, voting for a 50 basis point reduction. The Fed signaling 2 more cuts could be on the horizon before the end of the year, but there was a wide disparity among expectations.
Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk, and that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views.
Mr. President, Mrs. Trump, it is with great pleasure that my wife and I welcome you to Windsor Castle.
Your Majesty, Melania and I are deeply grateful to you and Queen Camilla for your extraordinary graciousness.
President Trump is meeting British Prime Minister Keir Starmer today and will celebrate the unveiling of $200 billion in U.S. investments into the UK economy. The deal covers energy, life sciences, and technology, and includes companies like Microsoft, OpenAI, and Nvidia. In fact, the CEOs of those 3 companies, as well as others like Apple's Tim Cook, top banking executives, all attended a lavish state dinner yesterday at Windsor Castle outside London. 51-yard long, beautiful table. President Trump hailed the special relationship between the U.S. and Great Britain. A couple of nice toasts. The president will hold a press conference with the British Prime Minister today. I think that is at his estate in Chequers. No relation to Richard Nixon's dog.
When you look at the conduct that has taken place by Jimmy Kimmel, it appears to be some of the sickest conduct possible.
ABC pulling Jimmy Kimmel live off the air indefinitely over comments the host made following the murder of Charlie Kirk. Kimmel linked Kirk's alleged killer to President Trump's Make America Great Again movement. FCC Chair Brendan Carr suggested ABC's broadcast license was at risk because of Kimmel's remarks. Joining us now is Puck's Matt Bellany. It's a big difference, Matt, between whether it was in response to Brendan Carr or the FCC, or whether it was just in response to what could happen with the middle of the country. Nexstar's has started. They have stations that are not maybe in New York, not in Los Angeles, not in Chicago, where people they're probably hearing from people, from normal people. Not that they're not normal everywhere else, but they certainly have a different viewpoint, the rest of the country does, than those coastal cities or the big cities like Chicago.
That's true. And ABC owns those affiliates in the big major cities like Chicago and LA and New York. But the difference here is that ABC was hearing from both affiliates and explicitly from the FCC chair, who was threatening, saying this is going to be the hard way or the easy way. And that is what really rattled people inside Disney. And they spent most of the day yesterday trying to figure out how to respond to this and quell this sort of uprising over the comments. And Kimmel did not want to apologize. Kimmel had his own way that he wanted to respond on the air. Disney, going all the way up to Dana Walden, who runs the TV division, she very much wanted this to be a clear apology and something that would kind of put this and not make it worse. And they couldn't agree. So ultimately, they just said, OK, we're going to put pause on the show, try to figure out a way forward. Question is, do they have a way forward?
He'll be back. That's my prediction, and it won't be long. Disney has feet of clay. They won't stick to this. So the woke outrage will get to them quickly. I almost wish they had just left him on so that the ratings can dictate exactly what's happened, instead of it immediately looking like it's, First Amendment, freedom of speech. He's getting canceled by the government, because that's what we're going to hear. You know what? What do you think's going to happen when he shows up, when he comes back in a week or whenever it is, and he walks out on the stage? It's going to be like a standing ovation. It's going to be like Colbert at the Emmys on steroids.
It will, and I think a lot of those people that were upset by the comment and got riled up on social media weren't watching Jimmy Kimmel anyways.
Anyway, not many people are. Not many people are. But it still does have millions of viewers, and it's still the videos from the show still have an audience. And unlike Colbert, Kimmel has value to that network. He hosts Who Wants to Be a Millionaire. He does the Oscars. He does a lot of different things for Disney and ABC. And his show does make money on YouTube, whereas the Colbert situation was much different. These are not big revenue generators as they once were, but he does have value to the network. So I don't think it's the strict financial conversation that it was more with Colbert. This is something where I think they want him to come back, but Kimmel, I could see him saying, thanks, but no thanks. I don't want to work at a network that doesn't have my back and is going to kowtow to the government when they don't like something I do. We see how much Colbert wants to stay on the air. I don't see, maybe that happens. Maybe you're right. I think he'd be happy to, obscurity comes quickly. To someone like that.
Although he's been talking about retirement for years.
Yeah. I haven't heard a non-political joke, I don't think. I don't watch, but maybe it's just the clips that I see. But how long has it been where it's been, twisting himself into a pretzel to try to get something funny about hating Trump or hating Republicans? You've seen Carson's comments. One thing he would never do is move into the political spectrum to try and make people laugh.
Yeah, but it's a different era. The media.
Are you sure?
The media ecosystem
it's a different era.
is so fractured.
Used to be 8 million viewers. Now it's 1.5 million or whatever it is.
Yeah, but there used to be no options, but 3 choices on the network and 1 late night host. I mean, now it's an entirely different environment, and Kimmel does have an audience. ABC renewed him the last time he was up because they like his show, and it does deliver an audience. So that's not the issue here. The issue is what Disney is afraid of from the FCC and the government, and that's why they acted here. The affiliates were upset, but the FCC was very upset. And in this media environment, you see one media company after another bowing to what the administration wants because they're afraid of the power. I mean, look, even in the station group, you have the station group Nexstar wants to buy Tenga and merge. It's a $6 billion deal that has to be approved by the FCC. So they seem to have aligned themselves with what the Trump administration wants, possibly because they want that deal to go through.
Yeah, I mean, The View's been on for how long and gets renewed again and again. I guess it does have to do with where the affiliates that they own are in places where there's an audience for Kimmel and The View, but different audience. Would you say different audience for Nexstar?
Yeah, I mean, it's of course, it's not Los Angeles or New York, but why did this particular comment cause the uproar? I think that the government's involvement here did matter.
Do you think that, I mean, I saw what the FCC chair was saying, that it's different than cable broadcast licenses, and there is something in there about the public good and everything else. Can you make the argument that lying straight-faced is actually violating some type of agreement to have that license?
Well, we can get into the specifics of what Kimmel didn't say and did say. I mean, it's been somewhat misinterpreted by some. Not a great comment. I will agree with you there. But if there's something false, you let him back on the air and he corrects it and apologizes and moves on.
Wouldn't apologize, right?
Yeah, if there's an error on this show, then people correct it, apologize, and move on. I mean, if we're going by what's true on television, I mean, there's stuff that ends up false on TV all the time. And remember, Kimmel is a comedy show. It's not the nightly news. And he does have an audience that wants to hear that particular kind of political comedy. So it's not like it's very unusual for the FCC to all of a sudden decide that something is not in the public good when this is a show that's been on for decades now. They were waiting. They were waiting for this kind of a situation to pounce.
Yeah, you've got a wide range of what you think is comedy, I guess, which is nice. You're very open to different ideas about that. A lot of things I think have changed since last week. I don't know. We'll see, Matt. We'll see. But good to have you on this morning. Thank you.
Thanks.
You just showed up out of nowhere.
Well, not literally nowhere.
But we were going along.
It did seem that
come
way.
back from break, and
I know.
So both chairs were open.
Yes.
You chose that chair. Is there any? Should we read anything in?
I was gently guided.
But do we
in this
read
direction.
anything into that? Are you going to play just a center?
I heard there was something about a good side, or
You know what? I thought that because when I look at Becky like this, I don't think this is my favorable side.
There you go.
So you know what? For the first part of the show, I've been talking to myself and arguing, which looks weird to people.
Yeah.
So I need to know, what the hell is risk management?
It's not like the other 21 hours of the day.
Yeah, exactly. I hear voices. What is risk management? Isn't that always what the Fed?
You would hope that's at least the first job. Yeah.
And then I also want to talk to you. They're playing music.
Yeah.
This is the best the stock market has ever been in the history of the world in terms of new highs. I mean, it's weird. Is it because are corporations doing great? Is it the Mag 7? Is it interest rates are coming down? Can we talk about that? Will you think about your answer?
Absolutely.
It's all of the above?
Cheese will be next.
Stay tuned. Mike Santoli sticks with Joe for the rest of our podcast, and there's a lot still to come. The world's most valuable company, Nvidia, is investing in Intel. Tech CEOs and President Trump are in the UK. Author Walter Isaacson weighs in on both headlines.
You're seeing this mix of media, politics, and the Trump administration playing favorites.
And Senator Elizabeth Warren joins us.
We need to have economic policies that are not just made for a handful of people who can afford to pay $1 million for a dinner with Donald Trump or fly over to England and hobnob with the royals.
All that awaits after this break. You're listening to Squawk Pod from CNBC, today with Joe Kernen and Mike Santoli.
Stand Joe by. 3, 2, wipe up to him. His mic. Cue.
Just happened moments ago. Nvidia making a $5 billion or agreeing to investment in Intel, a partnership. The deal does not include an agreement for Intel to manufacture Nvidia chips. Nvidia and Intel will, however, develop PC and data center chips, according to a news release that was just out. Jon Fortt, man, oh man. So at 7:14, he was in bed sleeping. At 6:40, no. You're here for the IPO.
These are my pajamas, Joe. Yeah, I'm here for the Netscope IPO, but just happen to be here as this news crosses.
Which is good. And my immediate question, Jensen Huang's over there right now at the state dinner, right?
Yeah.
Did the government, you see any of meddling here with this, or was it?
I don't know. I mean, of course, we know that America is a shareholder going forward in Intel, but you mentioned it.
Passive, supposedly.
Yeah. What's interesting here is that how the Intel stock is moving on this. This is not what some people might have hoped for, which is an agreement between Nvidia and Intel for Intel Foundry to manufacture Nvidia's leading AI chips, right? And Intel really wants to have this leading edge foundry, much of it in America, manufacturing the most advanced chips. This isn't what this appears to be. This appears to be an agreement for Intel to use its x86 computer, CPU technologies to connect to what Nvidia makes, and both on the PC side and then on the data center side, that what some would consider older school PC and data center brain connecting to Nvidia's new school AI brains. But perhaps some of the enthusiasm is hope. Okay, well, if they're talking about this, maybe they'll talk about some of the other stuff. $5 billion is not a ton of money for the amount of investment Intel needs in its foundry business if it's going to manufacture leading edge in the U.S. So $5 billion doesn't particularly move the needle. We're talking tens of billions of dollars that Intel needs invested there.
But they looked around during the CHIPS Act and thinking about supply chain and security, and oh my God, we need domestic foundries. And it was like, who do we have? I was like, oh no, all we have is Intel, right? At least, maybe not at the time.
Samsung, TSMC, they've got some U.S. Manufacturing, but Intel is on a whole different scale.
But Intel's fortunes even worsened since the CHIPS Act happened.
For sure. For sure. I think very few people anticipated, arguably nobody anticipated, how much Intel's core business of data center and PC chips would erode, because, I mean, when you got OpenAI showing up, driving people's imagination and expectation of what AI is going to do, and you got the data center investment shifting so quickly to AI chips, that's money that Intel's not getting.
Maybe we could sell our stake in Intel to Nvidia and just get out of this whole state.
I mean, it just popped. Right now, it can make a tidy profit.
Yeah, it is
make everyone happy.
Hopefully, we're in it for a longer haul than that.
Who, us?
Yeah.
We don't want the government in, do we?
Nobody asked me. But I'm just saying, if you're going to say America's behind Intel, it'd be awfully
do we still have the warrants in the airlines we got in 2020 when we bailed them out? I mean, it's like, stuff's sitting around in the government. It's not material to the government's budget, but it's big for the companies.
It is. President Trump attending last night's UK state dinner along with some business leaders and CEOs. Eamon Javers joins us now with more. Hey, Eamon.
Yeah, good morning, Joe. King Charles of the United Kingdom hosted President Trump at a royal banquet in Windsor Castle's St. George's Hall last night, with a powerhouse group of American CEOs joining the president and the king for the white tie affair, including Larry Fink of BlackRock, Tim Cook of Apple, Jensen Huang of Nvidia, Steven Schwartzman of the Blackstone Group, Brian Moynihan of Bank of America, Sam Altman from OpenAI. They've been hosting state banquets and official dinners in that room since Queen Victoria's reign, and it is an impressive venue. The long table runs 164 feet across the whole length of that hall. But the serious business begins in just a short time this morning with a business roundtable event with the CEOs who've traveled for this meeting. The UK government noted a long list of transatlantic investment announcements, including pharmaceutical giant GSK investing $30 billion in U.S. R&D and manufacturing, energy firm BP planning to invest $5 billion a year into the U.S. And on the American side, big announcements included Blackstone's pledging $136 billion over 10 years in the UK, Microsoft committing $30 billion into AI infrastructure, and Google announcing a new data center in Hertfordshire, if I'm pronouncing that right, as part of a $6.8 billion investment. And we'll keep an eye out throughout the morning for any other news or announcements that come out of the economic side of this state visit, guys. That business roundtable set to begin just in the next couple of minutes. Back over to you.
How close was Jensen Huang sitting to the president? I mean, could the president have said, Intel could really use $5 billion? Would you mind? And could that have happened last night?
Absolutely.
I'm kidding, but
you can see some of this video.
Yeah, go ahead.
I mean, Jensen Huang is at the president's side on a regular basis, right? I mean, he goes to all of these big set pieces. Work in the room last night, for sure. And look, this is a company that's made a business decision to get very, very close to this administration, and it seems to be paying off for them.
How many mistakes do you think you or I would have made picking up the right fork for the right thing? And I heard it took days to even set that table.
I would just go from the outside in, right? I mean, that's the lesson I was told as a kid.
Start on the left or the
however
right.
many forks and spoons, you just start all the way on the outside and work your way in. So if there's like 12 spoons, you just take the tiniest one from the outside and keep going.
I remember.
But the drinks thing would confuse me because I would always pick up my neighbor's drink, and that could be awkward.
That happens anyway, right? The butter thing, too. Yeah, I think on Downton Abbey, I think I learned that right about starting. Do you know? You'd be a mess.
I assume that you allow the king to go first and you just follow whatever the king does. Like, let him
but we're Americans, Mike.
No, exactly. But
we don't believe in that king
house,
stuff.
In
his house, right.
Thanks for being our friend. See you later.
Good to be here with the king of Squawk Box.
Joining us now on the state visit and the tech prosperity deal is Walter Isaacson, Perella Weinberg advisory partner, Tulane University history professor, and a CNBC contributor. Walter, great to see you this morning. How are we to think about this new mode, right? When CEOs are kind of flying around the world along with the president and obviously trying to stay in good favor and get behind what his priorities are. What does it mean for their execution of business?
Well, it's pretty interesting. I mean, you've had all sorts of diplomacy and military diplomacy over the years. And here's an example of pure economic diplomacy with a posse, a team going in. It's particularly interesting to me with Britain, because Britain, for the past 5 years, we've watched the whole Brexit thing and wondering how badly it was going to hurt the economy. I think this in some ways shows a real belief that Britain and the United States are going to continue the special relationship. I was particularly interested, too, in, Charles III. We kind of figured out, well, we don't have kings, you just said. It's interesting to watch how Charles III actually now seems to have a role to play, especially when it comes to getting President Trump to Windsor Castle, convening in a time when Britain has an incredibly unstable political system under Keir Starmer. The king has shown himself to be somebody who can be a stabilizing force.
The implications of that, though, of not just this type of diplomacy and maybe some, nudges to invest in the UK and form stronger bonds, but also we've been talking about this Nvidia Intel deal. We don't know, of course, what role, if there was a direct role, the government might have played. But clearly, Intel has been now sanctioned by the government as sort of a national champion, and it's obvious. Nvidia, $5 billion for Nvidia. Not a lot of money. For Intel, it's a significant gesture. So we have the U.S. government having a claim potentially on some Nvidia and AMD revenue of sales to China. I mean, how messy does that get?
I think it gets messy. I mean, we've always had a system of markets where we don't necessarily have the government choreographing investments between major companies. I think in President Trump, you have somebody who just loves making deals, loves being at the center of these things. but it certainly makes me uncomfortable that there's a lot of what you could call state capitalism here.
I mean, I guess, there's one way of thinking about it, which is the administration has solidified the lower tax rates for companies. They've encouraged greater capital spending by making this accelerated depreciation out there. In other words, it preserved a lot of advantages for American companies, and yet on the other side, want direct financial benefits coming out of it. At the same time, we're imposing tariffs. The administration brags about $300 billion in revenue from tariffs a year. That's taxes by another means. So it's kind of funny how, it's sort of, it's not so much offsetting, but it's interesting how there's kind of carrot and stick out there.
Well, I was interested in Joe's questioning of Kevin Hassett, too, on this question of taking a cut from what Nvidia, or trying to take a cut maybe from what Intel does, all of these things, especially if you're going to have chips trading to China. You got to figure out what are our national interests, our national strategic interests, and you don't necessarily want to mess that up by saying, oh, and let's make a little bit of a deal where we can get some money here.
Hey, Walter, I guess we'd be remiss if we didn't ask you about the overnight news of Jimmy Kimmel. I know that you're not familiar with him. You're a Greg Gutfeld guy. I know you tune in every night on Fox. But what do you make of what happened there?
It's different. These are companies doing these things because they're feeling the pressure. We went through an era of cancel culture, where people on the left tried pretty hard to cancel. Now we're going through a period of cancel culture. People on the right doing it. Obviously, I think you and I both feel this is not really the best way to have a sense of free speech and discussion in America. I think there are certain things that truly cross lines. I'm not going to get into the nuances of the Jimmy Kimmel one, but certainly if you're looking all across the board of what's happening here, we're starting to lose in a different way, a different flavor of our loss of free speech and our right to have comedy. And it comes at a time when there's been a lot of pressure. We saw the Paramount deal being put under pressure. We see Trump announcing lawsuits just randomly now against the Disney Corporation. So that's particularly interesting. It gets to Elon Musk, by the way, who bought Twitter, turned it into X, and it's become incredibly influential in changing the politics here. I think one thing to go back to, or to connect these two things, I was somewhat surprised that Elon Musk has not been invited either to the tech patio dinner at the White House or into England, and it may be because certainly he's been very strong pushing Tommy Thompson, the populist right candidate in England against Keir Starmer. And so you're seeing this mix of media, politics, and the Trump administration playing favorites and changing favorites, I can say.
If the FCC hadn't weighed in on Kimmel, and it was only Nexstar with all of its stations in the middle of this country that probably already weren't too enthralled with Jimmy Kimmel's brand of what, I guess it's humor. I don't even know what you call it. But let's say it was just Nexstar saying, look, this does not suit our viewers. He crossed the line here. What if it was the companies? What if it had nothing to do with the Trump administration? Companies are allowed to say.
Absolutely. Companies have the right to. You work at CNBC. I've worked at many media companies. We had the right to decide who to put on, and we had the right to decide who served our audience best. But as you say, the FCC has kind of weighed in. Trump has kind of, I don't know if he weighed in exactly on Kimmel, but, we're seeing this pressure on government. It's the exact same thing that people were talking about where the Biden administration would sort of push and prod and try to get things done. As somebody who spent 40 years in the media, I kind of think that once again, it's not something where government should be choreographing it any more than they should be choreographing microchip sales and who gets which cut of them.
40 years in the media. So this is your fault.
I think we can join together, Joe, and share the
I know.
blame if
We
you
just
want
celebrated our 30-year anniversary. It's Maybe it's both our faults, just from the either side. Walter?
The fault is not in our stars, it's in us, Joe.
It's exactly. Who knows what lurks in the mind of men? Only the shadow, Walter. Thank you. We do have a picture of Jensen Huang, I think.
There you go.
Is that what we want to show?
Yeah, it is kind of rare to see him without a leather jacket.
Senator Elizabeth Warren is saying the Fed had no choice but to cut rates to protect American jobs, and the senator joins us this morning. She's the lead Democrat on the banking committee, and Senator, welcome. It's good to have you on. I bet you're probably glad about 25, but I know you've argued for even bigger cuts.
Yeah, look, I've been arguing for a couple of years for interest rate cuts, but there's a difference between interest rate cuts that come because the economy is strong, because the job market looks good, and because inflation is headed in the right direction, that is down, and where we are right now. And that is that the job market is weak enough that the Fed felt like it had to go forward, even though the indications on inflation are headed in the wrong direction. I'm reminded that the head of the Fed, Jerome Powell, said last month that the Fed would have cut interest rates back in February, except for the concern over the chaos that Donald Trump was causing to the economy because of tariffs. And so that means we've had, for 7 months now, families paying more on credit cards and car loans and payday loans. And I'm just concerned right now about the economy overall. And I recognize that rate cuts by themselves are not going to fix the problems that Donald Trump is causing.
We had Senator, and I thought about it yesterday when I knew you were going to be on. I asked this question to the leader Jeffries when he was on. I'm going to give you a shot at the same question, and it'll take me about 30 seconds, but I'll be as quick as I can. The inflation rate of 2.9 is still above where the Fed would like it to be, but it was as high as 9% under Joe Biden.
Right.
The labor market may be showing signs of weakness, but unemployment is still 4.3%. Real wages are finally growing. The Dow, the S&P 500, and the NASDAQ are all hitting record highs. We've had major trade deals signed and hundreds of billions of dollars of foreign investment coming into the country, while the southern border is now secure and Iran's nuclear ambitions have been sidetracked likely for years.
Right.
Where is the calamity? What would you point to?
So look, I want to make 2 points here. The first one is the Fed and the rate cuts in the economy is all about direction. And yes, coming out of the pandemic, when Donald Trump was near the end of his first term, we had very high inflation, we had very high unemployment, and that was a problem. But it was down, 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 down on the trend lines. Now, those trend lines have reversed again, and we are seeing more weakening in the job numbers, and we are seeing prices tick back up. Plus, Donald Trump is claiming to have collected billions and billions and billions of dollars in tariff money, and that's going to keep pushing prices up. So the concern is the directionality. The point is the Fed is always trying to look at where the economy is going and trying to direct it. But there's a second point here, too. And I appreciate that Wall Street is doing very well, that we're watching incomes go up for a lot of folks at the top. But you really need to be looking at the numbers for what's happening to the rest of America. Look how big the consumer debt load is right now and how it has grown by $4 trillion over the past 6 years. This is not pandemic money. This is coming out now. More and more families cannot make it to the end of the month without borrowing money. Look at what's happening right now with car loans. More people are in default. More people are seeing their cars taken away. And for a lot of people, that means they can't go ahead and go to work. Look at what's happening to consumer sentiment. People who do the work every day, not the folks who show up to hobnob with the King of England, but the people on the ground here in America who keep this country running. They are telling us that they are not seeing an economy that works. And We need to pay attention to that. We need to have economic policies that are not just made for a handful of people who can afford to pay $1 million for a dinner with Donald Trump or fly over to England and hobnob with the royals. We need an economy that's working for small businesses, working for medium-sized businesses, working for people who do the work of keeping this economy going, and that's where the problem is.
The age-old problem, and I agree with you. It's a cover of the Wall Street Journal today. There really are two economies, but at the same time that we think about what we should spend money on, additional money on, you just mentioned how we're at 37 or 38 trillion, and I think we're at 24% of GDP on spending and 18% on revenues, and that's unsustainable. But when we talk about when you want to raise taxes, and maybe there's something to that, maybe a stepped up basis or something because we can't get at the billionaires' taxes. But would we try to lower are there other things we can do? We throw so much money at so many problems, and we don't seem to get a lot of return for it. What should we do?
Well, I don't know what you mean by we don't get a lot of return. Look, I think billionaires, yes, ought to be paying more in taxes. I think that right now, the idea that Jeff Bezos pays taxes at the same rate as a Boston public school teacher makes no sense at all. I think the idea that billionaires, really, taxes are optional for many of them because they just borrow against their wealth and then use a stepped up basis when they die for their families. So taxes never get paid on that. But remember what the Republicans are doing right now. A year ago right now, Donald Trump was saying to everybody who would listen, he would lower costs for American families on day one. On day one. Those were his words. He didn't say he was going to lower costs for billionaires. He said, I'm going to lower costs for your family on day one. And where are we? The cost of groceries is up. The cost of utilities is up. The cost of real estate is up. The cost of health care is up. And what's been the response of the Trump administration? Well, part of it has been the tariffs to drive up costs even more. But the other part, the big signature achievement, has been that the Republicans and Donald Trump have cut health care from 15 million Americans, and they are driving up costs in the healthcare system literally for everyone. Even if you don't have Medicaid, even if you don't have an ACA subsidy, if you have health insurance starting next month, thanks to the Republicans, you will be paying more. And why did they do all that? So that they could give tax cuts to a handful of billionaires. That's not how we make this country work better.
I think everyone, in the original tax cut, everyone did get a cut, maybe more accrues to be. Can I ask you about some of your comments last week? It had to do with, I don't know what we should do with the country right now, as divided as it is. And both sides, I guess you would argue, share some of the blame. But if we just hear constantly from your side of the aisle, fascist, dictator, rapist, just on and on and on, this incendiary language, don't both sides have to take some of the blame for this environment that we're in terms of, I mean, I don't know what you'd call this where we are in terms of political violence and even assassinations. But do you think, it didn't sound like you wanted to cool the rhetoric when I heard your comments last week.
I'm always glad for people to speak calmly, to speak about facts. I'm very much in favor of that. But the key thing, I want to say it, I can't say it enough. Violence is never the answer. And no one, does make any difference what your political views are, no one should be encouraging violence, because violence is never, ever, ever the right answer.
Senator, I'm going to have to cut you off in a second, not quite yet, but I think President Trump is going to be speaking in Chequers, which is apparently a pretty nice place where Keir Starmer hangs his hat, and we are going to listen in. But let me ask you one more question, because you have lobbied the Fed a lot about it, and you're very passionate about it. Oh, he is going to start actually right now. Thank you, and hopefully we'll see you.
It's an honor to have all of these great leaders. Really an honor. But I'm sincerely grateful to Prime Minister Starmer and Lady Starmer for welcoming us to this very special home, this beautiful place. The ties between our countries are priceless, and it's really an inheritance. It's a beautiful inheritance. Today we're making those ties closer than ever before. We've done some things that financially are great for both countries, and we work together, and it keeps us together, and I think it's an unbreakable bond we have, regardless of what we're doing today. I think it's unbreakable. But this is very big, and I want to thank all of the incredibly talented business leaders, the best in the world, biggest in the world, here this afternoon for investing in the Anglo-American Alliance, and you personify.
Next on Squawk Pod, hedge fund billionaire David Tepper.
The Tepper tantrum. There was a time where you said buy everything because of QE, and they were unbelievable calls. So that's who you are.
1 year ago, he joined us with a massive call to go all in investing in China. He said, buy everything. So where does he stand now in the markets around the world and here in the U.S.?
We're having a really good year, and I'm so miserable for having a really good year because I still own the market, and I can't stand that I own the market.
It's all good stuff. It's like the Squawk Pod. It says it's the best of Squawk Pod. It's like could be 3 hours because it's all good. You know who's here? Someone who never comes in studio, Tepper. We're now joined here at the table to discuss a lot of things: Fed decision, markets, and more. David Tepper, founder and president of Appaloosa Management. He's also the owner of the Carolina Panthers. I got to give some background on you. When one of the great investors of all time, Druckenmiller, we both know him. What he did, like 30% for 30 years or something? I don't know exactly what, but he said you're the guy now that has the big intestines to take the big bets, and he admires you for taking huge swings, and it's paid off. You were at our 30-year anniversary. You were not at that.
No, I wasn't at your 30th. That's why I decided to pop in today, because I wasn't at your 30th anniversary.
So you felt bad?
I felt a little bad.
The reason I brought it up is because in the tape that we ran, some of your big moments on the show were highlighted. The Tepper tantrum. There was a time where you said buy everything because of QE, and they were unbelievable calls. So that's who you are. I just want to let everybody know it's great to have you on. Thanks for joining. Have you been killing it the last couple of years? It's been so long since you've been on. Would you say you have been able to repeat your great success again and again and again? You've been killing it?
Well, first, I do want to congratulate you guys on 30 years. And Mike's here instead of Andrew. He looks kind of like a buffed Andrew, so I'll make pretend like that. Okay. And Becky's not here, so...
It's actually my social media handle.
You look nothing like her. Yeah.
No, I look nothing.
No, you don't.
That's not even close.
And a wig wouldn't help. Nothing would help.
Nothing would help. Nothing would help. Yeah, I mean, we're having a pretty good year. I mean, I actually was here last year, I guess, talking about China.
The China thing.
Yeah, which turned out to be half decently good.
At the beginning, and then maybe not so good later, right? But who knows how long you hold.
Now we're up big.
Now
we're pretty well. I mean,
it worked.
Kind of. Yeah, it's been big. I mean, like Alibaba's up a lot, so it worked pretty well. So I mean, we're having a pretty good year.
Where are we? And it's a good day for you. Why did you want to come in today? Because
I just came in because I felt bad
about missing.
And I'm in New York, the whole city, and I felt bad about missing your 30th anniversary.
Okay.
Which is a big deal.
But it is the Fed cut yesterday. First, is it the beginning of it?
I noticed it. I did.
You were watching this morning. You watched Frank Holland talk about it. Is it the beginning of an easing cycle?
Well, look, I mean, they eased yesterday, and I think the market knows there's another ease coming. Could be two more ease coming. That's what's in. I don't know what's in there this morning, but and you're easing, at least those eases are into as you just saw numbers out, not in a bad economy. And look, I don't know how long that lasts, and we're not at cheap levels in this market. On the other hand, when they eased after long-term capital and then they used to get into Y2K, I mean, we weren't in a bad economy then, and the market went a little bit nuts. I'm not saying the market's going to be nuts now, but, and by the way, the other side of that was a disaster, okay? Mm-hmm. So, I mean, I don't think another ease matters, as far as being too easy. It's going to be a little bit restrictive, or even if they do two. Beyond that, it's going to be a little tricky, I think, because you got to be careful not to make things too hot to have the other side of the mountain, which was really freaking ugly, in 2000, 2001, etc.
You haven't been on since Trump got elected for the
That's
second
not
time.
true. I was on last year talking about China.
Was that after Trump got elected?
That was just last year.
Was
it last year after Trump? I can't remember when he got elected. No, it might have been before Trump got elected, actually.
Yeah, I don't think you've got. You haven't talked about tariffs, industrial policy, the big beautiful bill. Do any of those go into your calculus for what you do?
Look, I'm not like a lot of, classically trained. I had honors in economics and college economists. I don't love tariffs. On the other hand, I don't think 10% tariffs, at least at that level, make a difference.
Okay.
And there's something to be said for having a little bit of, in an AI sort of world where you may have, a little less employment, have a little protection, or having people protecting people here. And the same thing with immigration policy. You could argue that if you do have eventual layoffs because of AI. So I can be fine with it. I don't love the 25% or the 50% tariffs. I think they're a little bit destructive. But quite frankly, 5 or 10%, or which are a little bit higher. I understand that. I don't think it really makes a difference, and it may be kind of constructive where we are right now.
You think it's a slippery slope to some type of state-sponsored industry by taking a stake in Intel and having Nvidia, pay royalties on stuff we let them sell to China, or any of those things bother you? Or
I don't love it when it comes from, and neither do you, because you've made comments in the past, when it comes from Democrats, and I don't love it when it comes from Republicans.
Right.
I mean, does it matter if it's not done widespread? Again, no. So it's, to be consistent about it, I don't love it on either side when it happens, because you take away from the natural kind of, process.
Does a great American economy, and it's the greatest ever in the world, does that, and AI, do those two things just sum up why I'm not going to put words in your mouth, but are you excited about the stock market for the next couple of years?
I'm excited. I'm not like, there was a phrase I used, about, I guess it was, you said it was a term used in the Navy, balls to the walls in 2010.
No, it's actually fine to use that because it's a throttle.
I know,
it has nothing to do with testicles.
So we decided it was you said that word. Who told you to say that word?
Testicles is a medical term.
Anyways, so...
it's a medical term.
Anyways, no, look, I'm constructive because of the easing right now, but I'm also miserable because of the levels. Mm-hmm. Does that make sense? So
is it just seven stocks, though, and everything else is cheap?
What's that?
Is it just 7 stocks and everything else is cheap? When they do these weighted...
No, it's not, though. I mean,
nothing's cheap anymore?
No, the other 470, the 493 are like 20 times.
They're 20 times.
Maybe a little lower than that, but they're not cheap by historical standards. Now, they're cheap pockets. I mean, if we do get rates lower, some of the housing-related stocks are maybe cheap, but they're not showing up in earnings right now because they've had tough quarters, and they're still having tough quarters. So depending where the 10-year goes and, where mortgage rates go, they could be interesting. But then again, if it just continues on the same way, they may not be interesting.
So you're not here to pass something down from on high, that it's time to just...
I am here because I just want to congratulate you and Becky and Andrew.
You guys have to have like a big party every year.
And have Tepper come in. I know.
That won't come every year.
I know. You don't come every year. I can't remember the last time you were in studio either. I mean, this is...
I was in the studio last time.
Joe's been joking about, not really joking, but 3% is a new target, right?
For the Fed.
The average CPI for 30 years back, it's like 2.9 or something like that. Like, in other words, 2% is not magic. The stock market seems to be kind of okay where we are if the bond market's not going to rebel against it. So how do we think about it?
My view has been that one easing or two easings or even three easings just don't matter.
Yeah.
Don't matter because we're still in a little restrictive territory with looks like a little bit too high inflation, even without the tariff-induced inflation. So they should be a little bit restrictive. Beyond that, I think it can, then you're really risking a lot of things. A weaker dollar, more inflation, and those sort of things. So we, you know, I don't. It doesn't matter what happens. If you really want to play with mortgages a little bit, you know, the Wall Street Journal had a thing that PIMCO said about, you know, not reducing the balance sheet with mortgages.
Right.
That may be something you do, but to go too much more on interest rates, depending what happens with the economy, you know, is it gets into the danger territory. Right now, to go another 25 basis points or another 50 basis points, does it really matter? You know, one way or another, it probably keeps the stock market a little buoyant. You know, you have to be careful because we're, like you said, where the average stock isn't cheap. The big stocks are not cheap. I mean, so you don't have cheapness here, but you do have a constructive, you know, like, you know, I'm not fighting the Fed. I'm not going to do that, at least in the near term. And then it's what happens on the flip, right?
Presumably, though, the composition of the Fed's going to get more dovish in the next several months, right? I mean, so therefore, maybe they're going to push it more than just a couple of eases.
You know, it's an interesting thing when you say that, because just what we're talking about here, if you push it, are you pushing the things you want to push? And the things you really want to push is, you know, probably the housing market and, you know, the pent-up demand there. So that can be counterproductive. So I don't think at the end of the day that, you know, you do have people like Besson in there, and I think they understand that. And they also understand that, you know, like I said, the same thing I just said, the 25 to 50 to 75, you know, maybe if you go that far, does it really make that much difference?
Right.
Okay, so, but if you push it too far, well, you know, at that point, you know, the old Joe would be going nuts, okay? I mean, you know, at that point, it just doesn't make a lot of economic sense. And you can't, a long time ago when I was a young man, when I was 30, I thought I could control individual markets. I can't control anything, and either can the Fed or either can people there. So you can push it so far, but you can't push it beyond that. And I think hopefully they understand that. So anyways.
Update us on China. There's not, a day doesn't go by when we don't say, the way the president said China. But update on your call on, have we replaced security concerns with economic concerns? Is that the right thing to do? Do you have long-term worries as an American about China?
Well, I do. I mean, listen, I always, it's what keeps my position from being too large because of worried about different things that can be there. On the other hand, look, you do have the same AI drivers there. You've had some movement in that market because people are realizing you have the same sort of things with AI there, and you know, some of the stocks like Baba and I guess Baidu yesterday, you know, with you're also making chips now, and they've been pushing it, so they're doing it, right? And not, you know, maybe they're like the H20 Nvidia chip or something like that, you know, that quality. So, I mean, I think the move has been good, and the earnings, unlike here, are still relatively low. I mean, you're talking, you know, low teens versus where we are. So it's like that. So I understand, you know, it's not like it was. It was ridiculous when, you know, last year. It was single digits. So you're not at single digits now, but you're not, given what the growth rate is and the multiples, you're still at relatively interesting levels, if you didn't have those other concerns, certainly. So, yeah, I think that.
Have you been holding Nvidia all the way?
I haven't held it all the way. I do own Nvidia, but I go back and forth a little bit because I do, you know, I will trade a little bit. We've always had some Nvidia position, but not the same size. So, anyways,
the market seems to want to look for the next highly torqued play to the same trends, right? I mean, you had Broadcom gets its run, Oracle gets its run. Is there enough to go around, do you think, for everybody that's now feeding into it?
Like I said before, if you didn't believe you had the other China issues you had, now that the Chinese can do whatever they want with their own stock market, but that would be the one that you already had a big move there, okay? But, you know, on an earnings basis, which you referred to before, you can make an argument that you still have a lot more there. But it's not easy it's easy for a small investment. It's not big to have too much of your book there because of the concerns you raised.
Are you boning up on AI? Is that going to be part of your investment thesis in the future?
Well, we have a big.
Is there
AI
any way
book.
not to be?
No, I mean, if you look at our 13F filings, I mean, we're big in the energy names there. We're pretty early there. You know, we do own Nvidia. We own some of the other.
Why do we have to look in your filings?
Stuff.
Can't you just tell us?
What's that?
Why do we have to look into your 13F filings? Can't you just tell us? Is it going to kill you?
I can tell you what's in the 13F filings.
Why can't you just tell us what's there instead of what's in the...
I can. I mean, we own the energy names. Like I'm not saying they're good right now or bad right now, but we own VSD and NRG.
What is good right now?
It's a tough market, like I said, because of the valuations for us. On the other hand, we own these stocks because they're moving, because of the Fed. And you lived. How old are you?
I lived it.
You lived
mean
it
the
in
bubble?
the late 90s?
Yeah, I'm just about 55.
He didn't see Neil Armstrong, I don't think.
Yeah, he didn't see Neil Armstrong. He did not see Neil Armstrong. So, we do have those stocks, and we do, obviously we're well known for being in China, and that's, if you really were, look, our easing is a big deal for them because it gives them more room to ease. So that would be the other reason. Our easing is their easing. So that makes it pretty interesting from that perspective. So, but you have moved a lot there. But you could make the argument that if you were going to look at one thing that's classically cheap.
Sure.
But there's a lot of hair at there. As it goes up from 8 times to 13 times, it becomes harder.
And at some point, we've had these cycles in the past where all of a sudden the word goes out, we don't like people getting too rich, domestic investors. And
well, that's the problem there, right? So there's a little bit of a different sort of issue there. So there's nothing. Look, we're having a really good year, and I'm so miserable for having a really good year because I still own the market, and I can't stand that I own the market. You understand what I'm saying? I don't love the multiples, but how do I not own it with an easy, I'm not ever fighting this Fed, especially when the market's telling me I don't know what it is today, but 1 3/4 more cuts, before the end of the year. So that's a tough thing not to own. But you are at these, you pointed out the average.
Well, and when people go down the list of, reasons that this kind of valuation gets supported, one of the things they'll say is credit spreads are incredibly tight, right? In other words, there's no macro signal that you should be worried about there. But on the other hand, that means there's not a lot of cushion, I imagine, in credit.
Yeah, no, I'm an old credit guy.
I know,
but they're very tight, and there's the private credit right now that probably results in that. I don't own it.
Right.
I can't own it. I can own I own the market a little bit. Listen, if I don't know, we had a big run because we have that savings because of COVID savings. If you want to make a bull case on China, their excess savings are still humongous because they haven't spent it, they haven't invested it. They're huge. We looked at the other day, I don't know if it's true or not, like $7 trillion of excess saving versus their normal trend over there. So this on the other hand, again, the market's moved so much. You know what, I have nothing, I can't just say I have anything, there's no other side to an investment right now. I can tell you why it may be cheap, but look where it went. Or in the other case, look where we are. And then on the other hand, how do you not stay around for some of this party? I don't have to be as big, but you got to stay for some of the party because the punch bowl is still there. They haven't taken it away yet, but when they take it away, that's what gets tough for.
They don't always give much warning.
Listen, if I had a small fund, then I can flip it. You have a larger fund, it's hard to move. So that's the challenge for guys that are a little bit larger in size. How do you position? You can't be that big because you can't get out. And listen, having lived through the other side of the 98, 99, early 2000 game, you can't get out. At least if you're big. So it's really, so that's a little bit tricky right now, I think. But look, they're still going to ease again, I think, right?
Yeah.
And so there you are.
Do you ever look out more than like 1 or 2 years? Do you worry about $38 trillion in debt? Do you worry about political divide? Do you worry about that?
I'm an American. Of course I worry about that stuff.
In terms of your investments, do you worry about, do taxes need to go up? Does spending need to come down? Can we grow our way out of this? Do we have the right policies to grow our way out of this? Do you think of any of these things?
Yeah, sure, of course. Look, the one thing about the tariffs, if they do help some of the deficit that was passed by the beautiful bill, so you kind of needed to balance things out a little bit. And they don't really score it, but it's, you kind of need that in there. So I do worry about those things. I don't love, nobody does, the divisiveness here. I'm a middle, look, I've been a middle of the road sort of guy forever. And, people on the right will say, well, he's a liberal.
I think you're left.
Yeah, people who are liberals say I'm a rural
no, they
conservative.
Don't. Nobody says that.
Well, they look who I've supported in the past. But I'm not. I'm neither. Okay, I'm an American.
All right.
So, anyways,
You're a great American. Then thanks for
happy 30th anniversary again.
Thank you.
That was the main reason for stopping by and to the and to
well,
you
it's
too.
been a year. It's been
You've been
since
on here enough times.
Good luck,
to say that.
It's been since September 26th, and I think most of the things that you were talking about are up either 40, 45, 46%. So all the averages in China
Maybe
that you
more.
were talking about. Yeah, maybe.
No wonder you're so
even more.
miserable for being in the market.
You know what? It's
I know
a
it's
funny
just-
He is kind of, I don't know, there are times you're a little bit troubled about things, are you not? Are you ever really happy? I mean, you own the Panthers. You can't be that happy.
Well, you know, I also own a team, an MLS team. You know this? I own a Major League Soccer team. And we actually set the all-time longest winning streak record for that league. We tied it
You did?
last week, and we're going
What
for
do
the
you call-
longest
which
winning
team?
streak, the Charlotte FC.
Oh, sure.
So what do you call football? Both?
Football. Football and football.
Football and All right,
I'll
Tepper.
see you later. Hey, congrats.
Thank you. Don't
Congrats
just
again.
move your chair out. We're going to break.
Okay.
You're going to walk in front of the camera.
That is Squawk Pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin, most days. Tune in weekday mornings on CNBC at 6 Eastern to get the smartest takes and analysis from our TV show, the best of it, really, right into your ears. Please follow Squawk Pod wherever you like to get your podcasts. And check out our show notes for links to further details on the stories we cover on the podcast. And also, we include timing guides for all of our guests, so you know just where to go in any given episode to find the start of interviews. Check it out. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.